Hello viewers and welcome to Sansad TV. I am Rajit Punhani, your host for today, and welcome to this special episode on a little different topic, the role of direct taxes in Viksit Bharat. After all, when we go march towards Viksit Bharat 2047, we will need resources, and taxes are one of the major resources for our economy. So in this episode, we will be discussing the role of direct taxes. As of today, direct taxes constitute more than 50% of the total tax collection, and so will play a major role in the resource mobilization for Viksit Bharat. In this episode today, we have two distinguished guests with us, and we are joined by Shri Pankaj Jindal. He is an IRS officer of the 1998 batch and presently Joint Secretary CBDT, looking after tax policy and legislation. We also have an experienced chartered accountant, Pushpendra Dikshit, who is Vice President and Global Taxation Head for PVR Limited. So now it's over to the guests. I will be raising some issues, some questions, and the guests would be responding and giving their views as well as figures. So we'll start with you, Pushpendra, on a little bit of the statistics. So over the years, over the last decade or so, what has been the buoyancy in direct tax collection, both in absolute terms and as a percentage of the total tax collection? You could also tell our viewers, because many of us may not be aware, is what is direct tax, which are the main direct taxes, and how much do they contribute to the overall tax revenue?
Thank you, sir. Greetings to all the viewers of Sansad TV. It's my privilege to be part of this special program. Direct tax, as Rajit sir rightly mentioned, contributes close to 56% of total tax collection and very important and significant source for tax revenue. In terms of numbers, we were to look at close to 21.26 lakh crore is the amount of tax collection that we got on in the last year, and we have seen a buoyancy of 13.3% in terms of numbers compared to the yesteryear. So definitely there is a increase in the collection, and we have vision Viksit Bharat and new income tax code 2025, which has been already put on the floor of the house, is underneath to make that dream turn into reality in time to come. Coming to the question of what is direct tax, so it's very interesting. The tax that directly pinches to our pocket, sir, is direct tax. Important among the direct tax is income tax. We pay tax of income that we earn. If you are a salaried employee, the income tax that is getting deducted of your income is part of direct tax only. And just to give a sense, out of total tax returns, close to 90% tax return is being filed by salaried class. So salaried tax is a major source of tax collection in terms of direct tax. Other direct tax used to be FBT and professional tax, etc., wealth tax, etc. Those have been faded in past. As of now, we have income tax as the only source of direct tax collection. Thank you.
So Pankaj, can you tell us, now the government has introduced the new income tax bill 2025 to replace a very old, archaic 65-year-old Income Tax Act 1961. So in very simple terms, can you tell our viewers what is the objective of the bill and what are its salient features?
So my greetings to all the participants of Sansad TV program. So income tax bill, there are two components of income tax bill. One is that the Income Tax Act policy is there, which was enshrined in Income Tax Act 1961. So and then there are compliances which emanate out of that policy. So the government has taken a series of reforms in compliances, like it started with e-filing and then annexure-less returns, and then over a period number of reforms have been done, and then the environment as such for compliances has been eased significantly, but the law remained the same. It was written in the old language. So the law has lagged behind, and in terms of technology, in terms of systems, in terms of compliances, so we had progressed much ahead. So that is why the government, it has this exercise was in offing for a number of years, but right now we have been able to present new simplified income tax bill. The policy as such as is there in Income Tax Act 1961, it remains the same in 2025 bill, but the language has been attuned to the new conditions. The language has been made more lucid, and a lot of emphasis has been given on formulas, tables, writing sentences in active voice, shorter sentences, removing provisos, removing explanations. So that way the whole law, the reading of the law has been made much more easier.
So can you give us a few examples for our viewers? For example, if you can just give a few examples on how, like, which provisions have been removed, how are the how is the language being simplified?
So one is that the redundancy, wherever like 1961 number of changes have been made, but then the provisions which were outdated, they still continue to remain on the statute. So those redundant provisions have been removed. Second is that because of number of amendments, every year some 100 amendments are introduced. So because of that, the law had become complex, and then the provisions were scattered across the whole statute. So all those provisions, for example, if we take non-profit organization, so those provisions, if one wants to read in the Income Tax Act 1961, they will not be available at one place. So now they have been made available at one place. Then similarly, for example, for TDS and TCS, there are a number of rates and thresholds and then conditions which apply. So a person has to find out what all he has to comply. He has to go through number of provisions to find out his compliances which are relevant to him. So now the whole TDS as well as TCS, they have been reduced to a table. So in a table, it would be much more easier for a person to find out. So similarly, in terms of exemptions also, they have been reduced to tables, they have been taken to schedules. So likewise, provisions have been consolidated.
So what about your feeling as a practitioner? You are on the other side of the table. So as a practitioner, what do you find best about the bill?
No, I think Pankaj sir has rightly set the tone that a lot of simplification and removing of redundancies that has taken place, and taxation of non-profit organization, trust, etc., school, college, etc., those enjoy tax exemption, or other non-profit organizations. Those were scattered, like section 11 talks about the exemption for NGOs, and then there was another section 1023 which was talking about exemption for medical and college institutions. Those have been consolidated. TDS rates have been scattered all across the statute, and because they had a history, at different point in time, different activity and goods and services were brought under the tax net, therefore they were scattered and they had history. Now putting together, simplifying, I think putting into a table, giving a reference, that really helps to interpret the statute even by a layman. Because idea is just that you should be at your own when you are reading a provision. If it is really tricky matter, then only you go to the tax experts. I think that objective is being met to my mind.
And do you think this will reduce litigation?
Litigation litigation mainly comes when there is a scope of interpretation. If the law clarifies the particular position through the example and illustrations, that definitely mitigates the opportunity to interpret or read between the lines. Going by that, definitely it will reduce litigation.
So can you give any specific example?
Yeah, so one example is that TDS for goods was introduced in existing Income Tax Act also, and then there were TCS provisions also. So while 206 section talks about the TCS, tax collected at source by the recipient of service, and then provider of service rather, because I mean the person who is making the payment recipient, while TDS section 194 Q was on goods. So, we were having TCS provision as well as TDS provisions. So, both require separate parties to kind of stick compliance too. So, there was a conundrum as to who is going to deduct TCS or TDS. So, people would say I will deduct TDS, you do not apply TCS. Now, those have been converged. Okay. So, that kind of anomaly has been done away with.
They have been converged, and to now what will happen?
Now only TDS will apply.
Only TDS.
So, these are the instances where scope of interpretation is done away with. So, clear example of right compliance of TDS, because TDS provisions are onerous. Non-deduction, less deduction causes severe repercussions. So, yes, it is a good move.
So, because we are talking about 2047, in our March towards 2047, the AI is now, the technology is changing so fast.
Yeah.
So fast. In fact, Honorable Prime Minister, when he was addressing civil servants on the Civil Services Day, he said that, you talk to a 10-year-old or a 15-year-old person and you feel you are outdated. So, I want to touch upon AI in two ways. One is, how will AI help in suppose filing of returns, in assessment, in litigation? So, that is one aspect. The other aspect which I want to touch upon is, how will you tax the digital economy? Now, nowadays, there is more and more payments, everything, your income earned is all through the digital means. So, is there any thinking about how do we tax the digital economy? How do we tax AI? Now, suppose AI is also maybe I am not an expert, but AI also could be a service. So, AI, suppose we have a robot, he may also earn income. Like all of us earn income, and like we were having a discussion yesterday in which they said after a few years everyone will have their personal robot.
Yeah.
So, my personal robot also may be earning money, maybe YouTube or something may pay him.
Yeah.
So, how will you tax a robot?
Yeah.
Because he may not be a legal entity.
Yeah.
So, is there any thinking on that? So, we will start with Pankaj.
So, like there are two aspects to this question. One is AI in tax administration. So, on that I would say that we have expanded the tax net, we have deepened the tax net without using intrusive techniques, and that is largely because we have increased third party reporting, and then all those.
So, what is third party reporting?
Third party reporting is like, I am indulging in some transaction, I have taken some transaction with some party. Like I have sold my property and then I go to a registrar to get that property registered. So, that registrar is asked to file the details of the properties where what all have been registered during the year.
So, the registrar is the third party.
So, registrar is the third party. So, similarly, we have increased the scope of third party transactions. And then, as you are well aware, that there is a form 26 AS in which all the transactions which a taxpayer undertakes, they are getting reflected, and also we are taking other items like dividend, interest. So, they are used to pre-fill the income tax return. So, that way, that is one. So, by using these non-intrusive techniques, by expanding our information network, we have been able to widen and deepen the tax net. And secondly, we have been extensively using AI in tax administration from the first stage itself. Like the returns, they are, when they are filed, they are e-filed. So, for processing, for picking up the return for scrutiny, we have certain parameters. Then we run those parameters and then select very few returns. 0.3% returns for scrutiny. And then,
but how do you select?
So, there are well defined parameters, and those parameters we run on that that whatever information we
software
have, whatever information we have out of those tax returns.
So, what are those parameters? For example,
somebody has sold a property.
So that is one
property. Again, that is one. So, we would say that suppose amount is above 5 crores, and then So some other criteria are also inbuilt, and then multiple criteria they are run on that database, and then out of that there is no manual intervention as such. So picking the case for scrutiny, doing the assessments are done in a faceless manner largely now.
Yes.
So and then cases which are flagged for prosecution, they are also risk assessment based. So that way we are using technology, we are using AI in our most of our processes. So that is one. And then second question you had asked about taxing the digital economy. So there I would say that the policy framework of the tax department is very strong, in the sense we have a vast treaty network and we have very clear business connection rules. So anybody having business connection, he falls in that tax net, and then that business connection, that is by domestic law, and then we have a treaty network through which all those things where a taxpayer who comes from a treaty country, so he can use that treaty to take advantage of whatever concessions they are there in that treaty.
Okay.
So on that taxing digital economy, we have taken number of steps. Like if we say we introduced a concept of significant economic presence, and then from that significant economic presence,
what does that mean?
Significant economic presence means like somebody is indulging in e-commerce.
Okay.
So he is soliciting customers here.
Okay.
So we are saying that above a particular threshold, say right now we have a threshold of 3 lakh users.
Okay.
So above a particular threshold, you have a business connection in India.
Okay.
So then you are liable for tax. So similarly, we we expanded that business connection definition by including significant economic presence. Then out of that, for that small players who are very limited number of users or for small transactions, we had taken out of that significant economic presence net.
Okay.
That is one. Then second is
that means less of harassment.
Less of for the smaller players.
Okay.
So that is one.
Yes.
And then second is, as I said, we keep on updating our tax treaties. So depending upon negotiations with the other country. And then there are other conditions in section 9A of the Income Tax Act, where we say that such and such thing for an investment fund or a fund manager will not constitute business connection.
Okay.
So that way we have a detailed policy framework in which we deal with these things.
But in the new bill, so again, just 2 follow-up questions, supplementary questions. In the new bill, is there any new provision to handle AI? One, and second, what is your thinking that maybe after your personal view, after 10 years, for example, if you have a personal robot, will the company producing the robot, will they be the taxable entity, or is it possible that the robot itself will become a taxable entity?
No, like first question was like what are
in the new bill,
what are the provisions? So as I said earlier, the policy in Income Tax Act and the policy in Income Tax Bill 2025, they remain the same.
Okay.
So that is kind of provides certainty to the continuity, perfect continuity between the act and the bill. So that is one. So as far as policy is concerned, there is virtually no change.
Okay.
So and then 10 years down the line, how will a robot be taxed? As I said, the concept is business connection, and the concept in treaty is permanent establishment. If you have a business income here in India because of business connection, then you are taxed here. If you have a permanent establishment in India, then you are taxed under the treaty.
Okay.
So that way, those definitions, they have to be applied onto a particular case, and then on basis of those facts, we have to see whether business connection arises or not arises, whether permanent establishment is there or not there. So that way, that taxation issue is to be decided.
Okay. Yes. What is your view, Mr. Pushpender? And secondly, has any other country has any concrete thinking been taken place in this regard?
I think it's very interesting question, sir, and it's thinking ahead of the curve, I think, which
Because
you have
nowadays,
just
like we had a show yesterday on law, you
Yeah.
know. So there is this thinking nowadays amongst legal experts
Yeah.
that suppose a remote or a robot or a remote driven car
Yeah.
has an accident, then who will be hold liable? Who will be culpable?
Yeah.
So similarly, there will be issues. So has there been any thinking in this regard?
No, I think we are pioneer in that, because this is a unfolding a realm. And I'll take first question about taxability of that bots or robots. So what I understand is that currently we have been talking about the concept of artificial neural network, which is basically a digital brain. So hitherto we were talking about computer, and ever since we started talking about computer, that computer had been mimicking human, that how efficiently a computer can mimic a human, that is going to be the yardstick to check whether it is right, it is moving on the right path or not, starting from the sensing, scanning, listening, speaking, all those kind of attributes that human have, those are inbuilt over the period of time in computers, and the only thing missing was that processing that information and make some intelligent decisions. Artificial neural network is the concept which is a digital brain that has been picked up, and companies like OpenAI, Meta of the world, they are understanding the importance of this particular concept, and therefore Chat GPT is just a beginning, and what they are contemplating is that putting together a general chat, they call it a bot, which is going to be having your brain, just a copy of your brain, how you deal with particular situation, how you behave in a particular situation, what are your preferences, and so on and so forth. So that general agent of yours is basically your replica, is going to be your responsibility, morally, ethically, as well as financially. So Income Tax Act is very well written, fundamentals are very strong. Even today, representative or minor are already getting taxed in the existing statute. If I were to think aloud, I think they can very well be captured, because we can't be allowing a machine to dictate us. We are expecting them to be a obedient servant, not a smart master, because still I believe human intelligence is far excellence, far than the artificial intelligence. It's only that vacuum that we create by not acting, that is going to be the next work in progress for AI.
Challenge, yes.
Yeah. So that's the answer to your first question, which is very interesting, and I think we are thinking really ahead, 10 years ahead. That is going to be a reality. Coming to the another important question, Rajesh sir, which you asked about digital economy taxation. It's a subject which is very close to my heart. Especially because I started my career in 2006 after qualifying my chartered accountancy, and those were the days that the Income Tax Act was written keeping in view the borders, that it's a American border, physical borders. Now you understand with digital economy, borders got blurred. Now goods and services are taking place across the border, but people are not moving. However, economic activities is being conducted. What happens to the tax pie, the taxability? Whether India is getting its tax pie through those e-commerce transactions or not? That was the pain point for India. And keeping that point in mind, India carried out some unilateral tax measures. One of those was introducing the concept of significant economic presence, which sir just talked about in the Income Tax Act itself, that digital transactions by non-resident for resident in India, we are going to tax you. So just look at the beauty that even 300,000 hits on your laptop are sufficient to make you tax liable in India, or 2 crore rupees of turnover, goods or services. These are the two yardsticks to make a non-resident taxable in India. But this is what you have done in your domestic law inside your country. How to make a non-resident liable and responsible for your act, unless you renegotiate the tax treaties which were agreed in past years, and that is a mutual activity. You can't do it in silos. So that is work in progress. OECD has done pillar 1, pillar 2. That was a step in the right direction to tax digital economy.
Okay.
And that
what is pillar 1, pillar 2?
So pillar 2 is basically they are two step to tax digital economy.
Okay.
One is making sure that wherever income accrues, that country, source country has the right to tax.
Okay.
Because there has been a continuing battle between developed countries and developing countries. Developed countries believe only tax resident, I will pay tax in my home country. I will not pay tax in the source country. Developing countries, which is supported by UN model also, they believe wherever you are accruing activities, if you are earning income from India, you must pay due tax to the soil.
Yes.
This is what is being picked up finally, because India had been advocating this source based taxation, which they were not paying heed to. But I think India is inevitable in terms of the population, in terms of the service provider, in terms of the consumption market, the young population in the world. So they had to agree, and now they agreed to the fact that yes, the source country will have right to tax. That is the principle, pillar 1. Pillar 2 says, sir, regardless of the place you operate in the world, you got to pay 15% tax.
Okay.
So these are the two pillars for which I think almost 146 countries have agreed. Have agreed, and it's work in progress, which was supposed to get replicated into New Income Tax Act also. I think that's work in progress. But because of the tariff thing and I think retreat of equalization levy also, it's a work in progress. But I think that's the right way. We have to embody.
It's in the right direction.
We have to embody those provisions into our domestic law to tax digital economy.
So, I mean, it's so interesting and we'd like to go on and on, but my producer is telling me we've run out of time. So, I'll just ask one last question, more of a conclusive thing. And it's a little general, but if you can give some specific answers. How do you think this new age global economy taxation administration, how do you think it can impact us in our march towards Viksit Bharat 2047? Just a concluding short brief remarks.
So, how it will impact our march? I think it will have a positive impact only, because the businesses are going to be digital, and then more and more revenue will come out of digital economy, whether it is resident, whether it is non-resident. And then other businesses, other sectors also, manufacturing, agriculture based, they are also likely to see a growth. So everything, like as we move towards Viksit Bharat, every sector of the economy, they have to show phenomenal growth. So then only that some of it would be kind of Viksit Bharat. So I think we are going to have a very good time with digital economy, because today also if we see the collections, they have improved because of the number of transactions which have become digital. So our buoyancy has increased, the total collection has increased, and because of collections, the fiscal deficit it goes down, and then government has more resources to flow back into the economy for making capital investment, and then everything else, the whole ecosystem, it picks up, because of the more the digital economy picks up, the more everything tugs along.
So your last remarks, concluding briefly, we're running out of time.
No, I think Pankaj sir rightly talked about it. I think we have already, India has to play a pivotal role. I think GST law, which got implemented in India, which is the biggest reform in indirect tax post independence, is pulling together 28 states, 8 union territories, making a GST council, meeting every time, taking call on the vexed tax issues, and having a representation from state as well as the union. I think India is a beacon which can give this standard model to the globe. We have a common body, because when we are talking globe, when we are talking digital economy, we got to have a common body, having representation from everyone. India leading the march, because India is inevitable. I mentioned, you can't ignore India in terms of consumption, in terms of the service provider. We have all the potentials. We can really be the beacon, to my mind. And I think new income tax code, which is being put together by Honorable FM under the leadership of PM Modi ji, is a step in the right direction. We are on right track.
So on this positive note, that's all for today, viewers. See you on the next episode. Thank you.
To watch more programs of Sansad TV, subscribe to our YouTube channel and don't forget to like and share them.